Everybody can hear me, that's great. Welcome everybody, and I'll start with thanking Sama, CMA, Fintech Saudi, and Bayak for hosting us here. Today's discussion obviously is written in front of you. We hope to have a sort of meaningful and I guess lively debate today. We have an excellent representation from basically all walks of the ecosystem. We'd love to have SMEs sitting there too, but it was hard to call 750,000 of them. So we thought we'll get some fintechs, some government-backed entities, a large incumbent bank, and an NBFC which has been around for 12 years. So what I'll do is, before I open the show, I thought it'd be best if the panelists introduce themselves rather than I do you guys a disservice.
Fantastic. Thank you very much, Arjun. Paul Mulatto, I'm the CEO of Alrida Finance, which is a financing fintech revenue-based lending company. Started in 2014. I've been in country for the last 12 years, set up multiple startups across the US, UK, and Saudi Arabia.
Thank you, Paul. Thank you, Arjun. My name is Shilpi, and I am the COO of Fintech. We are a fintech that got established only last year. We are backed by Saudi Aramco, and we're working in the supply chain finance field. Right now, from my perspective, I've been in the banking ecosystem for last 16 years, in the UK mainly, with JP Morgan mainly. So. In the startup scene for the last 4 or 5 years now.
Hi, I'm Munif Al-Ataybi, heading the business banking and SME in Saudi British Bank. I've been with the bank for the last 20 years, in working in various positions, retail and corporate. Currently, I'm heading the SMEs in SAB. And we're talking about SMEs with the turnover up to 200 million.
Thank you. Faisal Al-Hammadi, I'm an ex-banker. I've worked in the corporate sector and SME sector for a while, and right now I'm heading the strategy at the SME bank.
Excellent. So SMEs, right? So I think we should refer to it as MSMEs because I think the micros should not be excluded, and actually they form, I guess, the largest cohort of the MSMEs. But every time the word MSMEs or SMEs sort of pops to mind, I think a report from either the IMF or the World Bank, I forget what the report was, there's a number which is to the tune of, I think, $5.2 trillion of unmet financing needs per year. Exists across emerging economies, right? And that's kind of where the story starts. And then when you think about the fact that these MSMEs, and I'll keep making that mistake again and again, constitute something like 99% of all the businesses that exist in a particular country. They employ more than 90% of the workforce. They contribute above 50% of the GDP, and then there's a constant story about them being underserved, whether that's from a financing perspective or other banking and financial services products that exists. For the kingdom itself, from everything I've read, we have somewhere in excess of 750,000 MSMEs which exist. That data is about 12 months old, so if there's anything, that number has grown, right? There's some couple of very interesting stats I read last night while I was preparing for today's session. Apparently 33% of the adult population here wants to open their own business in the foreseeable future, and nearly 90% of the people believe that entrepreneurship is the occupation of choice, right? All that, and we're still not up to the mark in making sure that they are served well enough on, I guess, the primary need, which tends to be around working capital financing or funding. But let me start with Paul, because Paul, you just mentioned you've been here for a decade, right? Or a bit longer, 12 years, I think.
Yeah, a little longer than a decade.
Yeah, that's as much as I've been in the region. How have you seen the sort of small business landscape evolve in the kingdom?
The small business landscape is very dynamic. I think the micro businesses here now make up 85% of all micro SMEs in Saudi Arabia. but they've moved very quickly and rapidly towards digitization. Part of it probably forced by COVID-19. Part of it based on the support that they've received from the government. Fintech Saudi payments, other fintechs that have launched in the region like STC Pay, providing different payment resources. And I think they're moving very rapidly towards digitization and growth. But every SME, when you look at them, have their own facts and circumstances. So when you start talking about underserved, it's very hard to serve something that's not very plain vanilla, right? And every SME has different facts and circumstances that need to be addressed, whether it's payments, cards, spending, launching their businesses online, the support tools. And a lot of that has been developed with incubators within the country. Moonshot has supported incubation of these SMEs in different incubators. So that's the dynamic of it. And even when you look to the West, a lot of the SMEs are doing the same thing. Electronic cash registers, online payments, payment by app, tap by phone. But I think the pickup here has been much, much greater. And it's due to the support of fintechs and the government support.
Okay, so I hear you. So I hear a lot of positive stuff. So the business model digitizing, right, which basically means transparency becomes greater, right? There's greater availability of data, right? There's a sense of professionalism which sort of walks in, right? So I come to you, Munif. You're part of a big bank, right? Do you really feel that SMEs or MSMEs in the market have been underserved? If so, why do you think that's continued?
If you mean underserved by through financials, through supporting through finance, this is a long-standing issue, and it's not just in the emerging market, in the developed market as well. There is a huge gap when it comes to financing the micro and the small, and there is a reasons for this, and the main reasons is the business model itself for micro and smalls. We all know it's either a family business or a one-man show, especially on the startup side. They might know the business, but they're running the business from financial point of view and accounting and delivering a professional business model. This is an issue for them and challenge. Also, there is when it comes to from the lender side, the process itself, the way they are dealing and processing their lending toward the SMEs is the same concept like a chorus. So there is a high cost in it comparing to a relatively small revenue and profit. So this is another issue. Also, the information asymmetry or the lack of audit financials, which does not really give the lender the appetite or mitigate the risk in order to finance those small companies. Having said that, there is a lack of collaterals that can be provided by small and micro businesses, which lead to higher capital charges from regulators. So these all factors that really is making it difficult for the micro and small to benefit or to get a financing support from the banks or from financial institutions.
So let me, if you don't mind, I'm going to ask a second question. So we accept all of that, right? So what is your bank trying to do differently?
Okay, what's happening now in Saudi, there is a lot of support from the government. When it comes, for example, as a collateral, as an issue, now a lot of entities within Saudi are providing a collateral to support a micro and small business. We're talking about Kafala program is one of them. There is a lot of programs coming from different Saudi fund, real estate development fund, tourism fund. There is another funds coming, SIDF now also they are supporting the manufacturing part. So the collateral is there. Now we as a bank in Saudi, we are very dynamic, creating special product programs specialized to service the micro and the small segment. We're doing a lot of digital transformation to make it possible to serve this segment, opening like different channels to provide the service, not just on the financial parts, but also to do some cross-selling in our products as well. So there is a lot of things happening now, and we are trying to benefit from whatever there is opportunities. And there is a huge focus on the micro and small from SAP at the moment.
Okay, so that's good. Faisal, let me come to you. We spoke last night and you mentioned the indirect lending program, right? Which
Yes,
has been in existence for, I think, 4 years roughly.
Yes.
Right? And you've obviously been a part of it from its very inception.
Correct.
Right? Talk to us a little bit about, what is the program, how and what it's achieved over the last 4 years.
So touching on the point that Manif said, that the government has played a role in basically activating the ecosystem, and it's been a major catalyst. The indirect lending program is no different. So this program basically goes to the funding institutions, the financial institutions such as the NBFIs, and will provide them with this sort of low-cost funding for them to lend to the SMEs. So it's a sort of back-to-back lending to the SMEs, to the beneficiaries, bringing down cost of the loan itself and bringing down the requirements for the loan. So basically, they're not requiring as much as they required previously, and the rates have gone down significantly. Now, the indirect lending program is one of the building blocks, such as kafala, like Manif said, of the SME bank, and the SME bank would capitalize on that and bring forward several products, which we may touch at a later stage. But in essence, the indirect lending program has achieved so many milestones in the last 4 years. I think the portfolio size started at 1.6 billion, and now the asset size is over just about close to 3 billion Saudi riyals. And I think this is a significant increase. And if we look at it from both ways, pre-COVID and post-COVID, actually post-COVID, it actually capitalized or catapulted the indirect lending program when it comes to increasing the loan book asset size.
And that brings me back to you, Paul. You mentioned you had something that your business has catapulted. Now, if I'm not wrong, you have worked closely with both, obviously Moonshot, but also the indirect lending program, right?
Moonshot, indirect lending program, and now the SME bank.
So what have you seen in the last few years? Because, when we talked about the size of your book having expanded quite exponentially post-COVID, and that's a global phenomenon because I think the SMEs are in dire need for help. I guess COVID hurt them more than one could have sort of imagined at the start of it. What have you guys been up to for the last couple of years?
Yeah, so the last couple of years, including COVID, I mean, Sama supported, and so has Moonshot as well, to delay payments or defer payments during the COVID period. Also provided liquidity to the market. Instead of sitting on that liquidity, we expanded our program. And the way we've done it is we've done it through POS financing, or merchant cash advance financing is our growth product. And it's grown significantly over the last 3 years, from 150 million in 2021 to 500 million this year, and to over $1 billion next year. And we understand the needs of SMEs. We have 250 employees, and 100% of their time is focused on dedicating towards SMEs, because that's all we work with. We don't diversify, maybe to our fault, but we are focused on SMEs, and we've been able to establish very good rapport throughout the kingdom. And also we've taken into account the struggles that SMEs have with managing cash flow, right? Because we don't take fixed payments with the merchant cash advance funding. We take a percentage of revenue. So there's always money left in their bank account to be able to pay for other things, as well as our ability to also help them manage that cash flow. We've been able to help them expand their businesses, and we've seen businesses expand from 1 branch to 10 branches in a period of 12 to 18 months. Mostly focused, when you talk about these merchant cash advance financing products, mostly those retail, coffee shops, restaurants, etc. And we also do online. So we work with Noon for online merchants, and we've seen people move, obviously, for COVID-19 to an online business model, because that's the only way they could operate when things were shut down. and it's helped immensely, and we're part of that. And when we look at the credit piece of it, so we're not risk adverse, we're risk takers. So, you know, the first thing we don't ask for is audited financial statements. For us, it's pure cash flow lending. We know what we're getting ourselves into, using different AI models and machine learning models that we've been able to partner with a company in the US called Data Robot to help us drive business through our platform.
Great. Sounds pretty impressive. Shilpi, so tell us a little bit, two-part question. Tell us a little bit about Llama, right? And talk to us generally about, I guess, what's the role fintechs can play increasingly to sort of, I guess, further improve the need, or further improve the meeting of the need.
Absolutely. Am I audible?
Yep.
Yeah. Okay. So I'll start with fintech. I'll start with the second part of the question first. I think fintech really is a catalyst, right, within the ecosystem that's fueling economic growth for SMEs. My friend here, Paul, mentioned AI and ML, and that is, you know, where we're talking about technology, right? How technology is driving decisions in the credit space, in the risk space, in the whole lending space, and making the unbankable population, you know, people who don't have collaterals, people who don't have audited balance sheet, how are we able to assess them? How are we able to fund them? How are we able to include them in the ecosystem? And that's where Llama comes in, right? So Llama is an innovative, we call ourselves a creative product. The product has existed for ages. I think, you know, factoring as a product, all banks provide. What we try and do differently is enable it through technology, but also take the risk away from small and medium vendors and focus on large enterprises who have good credit standing and have a good supply chain, whose vendors would benefit from getting early payments and not having to wait for 30, 60, 90-day period for a discount that is quoted, that is enabled by the vendors themselves, right? So we are a platform that connects the vendor, the enterprise, and the investor. So we are in fact working with SME Bank. We're trying to work with SAB Bank, you know, in terms of developing funding solutions that will enable SMEs to be a part of the financial ecosystem in the region.
Great. So let me come to Saab on this. So what's your view of working with fintech? So is it banks and fintechs? Is bank versus fintech?
The way I see it, Arjun, the bank, SAP for instance, is a big fintech. We are using technology everywhere to service our customers.
Can I quote that publicly?
It is. Giving our unique position with HSBC, we really want to be the international bank choice for international and local fintechs. We would like, or our aim, I would say, is actually to enable the international fintechs to operate and work in Saudi. In the same time, we want to support the local fintechs to expand internationally. Calibration is very important, and it's essential and part of our daily job. We provide, we work with fintechs on providing consultations, services for technology and businesses. We also provide enabling products and services for the fintechs to operate themselves. At the same time, we're using them in the bank digital transformation. Also, we do a partnership with fintechs to deliver some solutions to the pain points in the markets. Fintechs are very agile, and at the same time, you need to benefit from the technology innovation that they do have. So calibration is very important when it comes to fintechs.
Is there a use case that you want to point out which has recently taken off very well, where the collaboration has worked? specifically in the SME space?
Like if we talk about, for example, what we are doing in terms of digital transformation, we're revamping our process. We're trying to use the technology to conduct a credit assessment, to give an access digitally to our remote areas. So there's so many things and so many projects where we are using Fintechs at the moment to deliver some solution for our customers.
Okay. Fazal, back to you. I guess congratulations. I think the SME Bank has been recently constituted.
Absolutely correct. 4th
Great.
of December.
Sorry?
On the 4th of December, so a couple of days back.
It's hot off the press then. So
Yes.
I think for people in the room, including the likes of myself, right, who don't sort of fully comprehend what is the goal and the objectives of the SME Bank, it'd be very interesting if you could sort of answer this question in two parts, right? One is explain a little bit more about what is the SME Bank, what is out there to, I guess it says what it says, but what it's out there to achieve, but also kind of give us a flavor of how do you intend to continue working, right, with the fintech landscape, right? Both in enabling the fintechs themselves, but also collaborating and going to market together with them.
Sure. So let me just give you a quick background on the SME Bank. So the SME Bank is built around three major programs or initiatives. The indirect lending program, which we just spoke about.
Yep.
Kafala, which is very well known. This is a sovereign guarantee program. It's been there since 2006. And there's also the Saudi Venture Capital Company, which is the venture investment arm of the SME Bank. Now, the SME Bank would capitalize on these three initiatives and bring forward further initiatives and new initiatives with the fintechs, as well as the commercial banks and the non-banking financial institutions. And what we're bringing into the new market is the SME Bank aims to be a digital bank end-to-end. So basically, it is a fintech by itself, if you consider it that way. So there's going to be minimal human intervention at the final stage of the SME Bank. And hopefully, it will serve the SMEs in so many ways. I mean, on the inauguration day, the SME Bank signed about 16 or 18 agreements with commercial banks, MBFIs, and fintechs for a value of roughly 3 billion Saudi riyals. And this is on the first day. And
what was that value? 3 billion was
3 billion Saudi riyals
in
of
funding and
three different products. So
Right.
we have a co-financing product, which is something that we are doing with the banks, and maybe more detail on that later on. Something we're doing with the NBFIs, which is similar to the indirect lending model, but is more, it serves the NBFIs and serves the SMEs on a much bigger scale. And obviously, fintechs is basically holding hands with the fintechs and bringing them up to serve the SMEs in terms of financial capacity and financial liquidity. So these three areas are the main areas of the SME Bank today, but I promise you in Q1 and going forward, inshallah, it's going to be much more broader information about these projects.
Can I come back later in the talk to ask you what those will be, or you're not in a position to share it?
I don't think this is not the venue to share it, so maybe it's something, because it's not directly related to the fintech, so
Right.
it could be in another session, that's fine.
Okay.
But
So Go ahead.
but overall, I think capitalizing on the programs itself, I think SAB, Raida, they've been working with SME Bank even before the inauguration itself. I mean, we've worked together in developing or co-developing products with SAB, with other commercial banks, as well as with Raida. And I think you referred, Paul, to the point of sale financing and the exponential growth. I mean, that was catalyzed by the IDL and obviously by Raida itself. And I think this is something that the bank would continue to do and to serve the SMEs in that manner.
Okay. Should be coming back to technology, right? You mentioned something about technology. So talk to us a little bit about, what emerging technologies are actually getting mature enough that they're actually getting wider adoption, right? So, we all hear about AI and machine learning. Machine learning's been around for, a decade, right? A lot of people have been using it. You mentioned AI. I'm sure there are other technologies which are coming about. So talk to us a little bit about, which are the technologies which are maturing, getting mass adoption, not just as Lama, but also across the sector. And secondly, I guess I'm going to put you on the spot, and so educate your competitors here. What do you think are the sort of the ingredients of success, right? If you're looking to get in as a fintech to to service this SME market, what are the few ingredients of success you need in place?
So I think, this is a bit of a repetition when I say that AI and ML are here to stay. And while these technologies have, existed for a decade, I think they're continuously evolving. And like, Paul mentioned, that credit decisioning is now heavily dependent on AI and ML. For Lamma, for example, we use AI and ML in pricing, right? So our pricing is driven by what we are learning across, everybody who's bidding for an early payment, for example. But beyond that, I think what excites me is the fact that open banking is coming to the region, right? And which is hopefully going to change how we look at fintechs, how we look at banks and financial ecosystem altogether, right? We're all going to be expected to work more together and bring the solution that is one-stop shop for the SMEs or the consumer, right? Now, what I think are factors for success for an SME is the fact that we need to start recognizing what MSME needs are, and they're very different. We cannot consider them unbankable anymore, and no one solution fits all. Right? It's the time that we are enabled by AI and ML, and we are going to be able, based on the data, we can produce bespoke products, right? So solutions that match the business, whether it is a one-stop, one-person shop, or it's a 500 employee mediums enterprise. No two needs are the same, and I think we have to start using that technology and the data that we have to now start giving customized solutions for every MSME that hits us.
So so that's great. So how do you reduce the cost of customer acquisition? Because when I do talk to banks and I talk to NBFIs, usually one of the reasons they say that, obviously the size of the opportunity is smaller versus the risk, but one other problem which exists is cost of acquisition. Absolutely. Now, Al-Rada has, a solution. They're working with Noon, right? So that's one way of doing it. What else is out there which helps you sort of reduce your cost of customer acquisition?
In fact, Lamma is also doing a similar business model where we are working with large enterprises, right? Let's say we are working with, a large oil and gas, let's say, to quote an example, I will say Aramco, because, Aramco is close to our heart, being funded by Aramco. But if Aramco is on board and we have done our credit checks on Aramco, we can bring all 25,000 vendors that Aramco has through digital onboarding onto Lamma platform, right? And the reach is massive. Our cost of acquisition is fairly low because we are basing all our lending activity on the credit of this large enterprise, right? So we don't have to do credit checks. In our case, invoices are there in terms of the service has been given, right? So there's low risk or absolutely no risk. Large enterprise has good credit, so chance of failing is low, and the cost of lending therefore can be low. So SMEs can get access to financing at a rate that Saudi Aramco would typically enjoy getting finances at, right? Not the 14 to 24%, which is a typical lending rate in the region for MSMEs.
So Paul, let me bring you in. Aramco, Noon, progressive organizations. Are other enterprises in the kingdom willing to do similar things for their vendors?
Yeah, I think you look across the board, mostly on the technology side. You look at Zed, which is the Shopify equivalent in Saudi. You look at Jahez and Rewa, which is an electronic cash register for retail. So for us, the way we look at customer acquisition is financing is at the bottom of the funnel, right? It's the least used portion of the ecosystem. If you look at the top of it, we look at it as a funnel itself. At the top of the funnel, you have maybe merchant acquiring or card acquiring, and then you get card aggregation. And even at the top of the funnel, when we talk about open banking, having access to that data, it opens up to the population who logs into your app and you have to have that constant contact and repertoire with them. So when you look at the cost of acquisition, it comes down to this funnel, that the more people you get into the funnel that you interact with on a daily basis, the cheaper the acquisition, the faster the speed. It comes down to two things. I think it comes down to access to services and speed. Because when these SMEs come to you and look for financing or look for services, it's an immediate need. They don't have the luxury of having an accounting, finance department, planning, strategy for 2 to 3 years. They need to make an acquisition tomorrow because they're opening the restaurant and they need supplies. How are they going to get it? So I think when you look at it from a funnel perspective, the top of the funnel is the funnel that delivers the most people to your application, website, whatever you want to call it. And the bottom part of the funnel for us is the financing piece. Even if you look in the US to like Square or PayPal, who do merchant cash advance financing, they do 10% of their entire payments ecosystem gets financing. So their ecosystem for payments is huge. Their financing piece is a much smaller, but they are constantly interacting with their customers, giving them feedback, allowing them to have the availability and know what's available to them so they can make quick decisions to react to the market so they can drive their business forward.
No doubt, right? So we all read about the embedded finance opportunity, whether it's Shopify, whether it's Amazon, whether it's any other player, and I agree with you that open banking, or even if it's not open banking, the ability to share data, I think it all kind of comes down to sharing data. I think a lot of people are hiding behind open banking. I think a lot of this could have been done without open banking too, because you can actually get consent and do this. I'm going to ask you guys to kind of get into your crystal ball mode for a bit, right? And let me start from the further side of it. How do you see this market evolving in the foreseeable future, right? And what are the strategies that you guys are going to be focusing on to help sort of, further deliver the value?
Okay, so the market is actually growing, and from what we've seen, it's exponentially growing from the fintechs and the technology that is growing. So machine learning and AI, like she said, and I think it's something that we should consider, that the market is not going to be conventional as we know it. You have cryptocurrencies coming in, you have digital technology coming in, you have fintechs, you have banks moving in to digital transformations, and you have new banks such as STC Pay moving into the bank and all that. So I think this is something that the SME Bank will capitalize on it. And if you look at our vision and mission, I mean, the key words in it. So our vision is to become a key enabler of SME financing through providing digital services for debt, equity, and guarantees. So the key word here is become a key enabler. So that's our main role. Our mission is to unlock the SME potential, SME financing potential. So again, the key word here is to unlock the potential. There is a big potential in the market, and I think fintechs and financial institutions are bringing in much bigger in the coming period, inshallah.
Munif, your thoughts?
I believe everybody knows this. The digital financial solution is essential to resolve the issue when it comes to the financing gap for MSME. Today, you will see fintech specialize on managing HR for SMEs, for example, or providing a financial or accounting management support, preparing those SMEs, micro, small, to have a very healthy business model. Preparing them for the lending side as well. Banks now, or the financial institute, they are starting using the technology to resolve the issue of the high cost of processing for processing the lending part, integrating with a lot of fintechs and other enterprises in order to serve their customers. So there is a lot of changes happening. Everybody recognizes this, and there is a promising market for SMEs.
No, I do agree with you. I think the only side of the spectrum that I do see is that the fintech interest in this sector is exponentially growing, right? In the sense I interact with fintechs on a day-to-day basis. There are people who want to play in the embedded finance, banking as a service, or enable the banks, loan origination, coming up with smarter credit scoring mechanisms. So as Lama, right, do you have any sort of closing thoughts on, how do you see this sector evolving? Obviously, you're betting on it, right? What more? Let me be a bit more pointed to you in the questions. What more should happen across the ecosystem, right, to really, really unlock the opportunity, right? So I think the SME Bank is going to play an interesting role. That's no doubt about it. But what more should happen?
I think we are at, we are right now in the center of the movement for SMEs, right? So I was looking at a SAMA report which said only from last year, 2020 to 2021, there's been a 31% increase in the lending to SMEs. Right now, about, of the fintechs in the region, only 19% are in that space. So I think with the growing SME population and the numbers you quoted, there's still a huge potential in the lending space. And I think, that needs to be unlocked for us to really make a difference to MSMEs.
So I'm going to put you on the spot on this. Now, you opened the door here. 31% is just not enough, right? Let's be honest.
Absolutely.
Right? 31% is not enough. And I totally agree with you that fintechs predominantly in the region have sort of focused on the B2C segment because it's flashier. Let's put it that, right? Everybody likes their names on bottles that you can sell in cups. And unfortunately, B2B world sort of sits in quiet. Paul will disagree with me. He does wear a pink handkerchief, so he is pretty flashy. But what does it need to do differently from being 31% to 100% year-on-year growth? What's required?
You really are putting me on the spot.
I'm sorry, I told Fintech Saudi not to call me, but
I think the question should be directed to the,
I will.
SME
Don't worry.
strategy.
I'm going to start with you, and I'm going to ask some other questions. But I'm going to Paul's there next. He's already preparing his answer for that. But I'll start with you.
Are you referring to what it takes, for example, to be fully digitalized, for example?
No, what I'm saying is so. SME lending grew 31%, right?
Okay.
31% is not sufficient, right? In terms of the speed at which A, the economy is growing, B, the gap that exists,
okay,
right? So how do we actually grow at a faster rate? What needs to be done more? What can be done to unlock and make that 31% 2x or 3x of
and
that?
one of the things I think of SMEs themselves, they have to really benefit and know what's going on in the market.
Okay.
They have to be aware of the fintechs, the available fintechs and solutions. They have to work toward enhancing their position in order to be able to get the right financing, understand the available opportunities. I think there is a lack of awareness for SMEs. That's for fact, and we're trying to work together with the entity governments, other financial institutes to deliver a message to SMEs. There is a lot of, take for instance, the central bank is trying to push this awareness concept. I think it's a collective effort between the lenders and the SMEs. We are going toward the right way. It might take a bit time, but I think what is SMEs at the moment position in the kingdom and what they and what is the opportunities that are available for them, it's huge, and compared to any other country or any other market.
Just adding to that point,
Go
right?
ahead.
So, I mean, one of the challenges is definitely equipping SMEs, even to finance them, right? So there is definitely that lack of awareness of funding options available, beyond friends and family and beyond a mortgage or beyond, So getting out there and, talking more about fintech products that are linked and that, that are developed for SMEs, that are not designed to hold back or are not necessarily asset linked. The concept is not there yet. I think there's a large portion that we're seeing with so many fintechs coming up, the good part is we're getting out there and we're talking about it, right? So people are hearing more, there's education, but obviously there's a time lapse that happens with that. I think one of the other things would be, yes, there's a lot of momentum that is coming from the regulator, SAMA, for example, in terms of equipping SMEs. I think, also the fact that SME Bank, and such other institutions are focusing now. To be frank, they've only launched 2 days ago, right? So the change is happening. The pace is going to accelerate. So next year, when we're sitting in this forum, I'm sure it's not going to be 31%, it's going to be 3x or 4x as we can see it. On our platform alone, I can tell you we have a demand of 2 billion, right, for SME funding through large enterprises who have good credit history, right? The gap is the funding getting available, right? And that's where we're looking for partnerships, not only with SME Bank, we're also talking to SAB. We've recently announced 2 large partnerships, one with BSF, so Saudi Fransi Bank, and one with Rasana Capital. So working with NBFCs and banks in the region to make that happen is really, what we are trying to get to.
Paul, do you want to add to it?
Yeah, I'm going to be a little controversial here.
Please. I like that.
I think the SME Bank and the government has done a lot of what they can do. It now comes to private industry and the private sector and the banks, because as much as we want to say that we're there to support the SMEs, and maybe it's the M in the SMEs and not and I don't mean micro, I mean medium.
The mediums, yeah.
I think there's still a lack of liquidity. There's, so from our perspective, we're on pace to generate $1 billion next year, $4 billion the year after that, and all the way out to 2027, where we see $7 to $10 billion that we're going to be able to finance. However, we're not a bank, so the liquidity sources are limited to banks, the government institutions, and other programs such as our Sukuk program, to raise capital to grow this thing. So when you look at some of the banks specifically talk about financing or support of liquidity for SMEs, and when we show up to the bank and ask for some of the liquidity, more times than not, we get the door closed on us. Now, we're a highly profitable organization, highly growing, and we have been able to raise money from those banks. Some of the banks in the kingdom and other funds, but it becomes very challenging. They want you to be profitable, even though if you're a fintech starting up and you want to start utilizing balance sheet, you have very little luck of getting liquidity in the market, and that really is the drawback of the growth within the SMEs. And I think Llama's product that they have that has this credit risk, if it's a Ramco, who doesn't want to take a Ramco credit risk? They should be pouring money into the company, not doing that. So this $2 billion should be funded by tomorrow, but most of the focus has always been, like you said, to the consumers, right? So cheap personal lending to consumers. Now, some of the SMEs use personal lending to finance their business. And the SME Bank or even the Social Development Bank lends to individuals who want to start businesses. So those programs there. But it's just a lack of liquidity in the market. And again, the government institutions can only do so much. Creating other markets to generate more liquidity would be very helpful for this to grow. And there's more than not. If they knew there was liquidity, there's a lot of peer-to-peer lending platforms in this market that can generate large levels of transactions that are fundable, and they should continue to fund those transactions.
So, Paul, if you allow me just to add on your point, so I think the major item here, that the elephant in the room is steering commercial banks towards the marketable SMEs. If you look back in 2018, I think the SME total loan book to the total lending in the commercial sector, I think it was 4.5, close to that number. We're close to 9% this year, so that's 100% CAGR over 4 or 5 years. So you're looking at, since the initiative started, IDL and the revamp of Kafala and introduction of other programs, I think you're looking at exponential growth. And the reason is we geared, or the government tried to gear these commercial financial institutions towards new bankable customers. There are a large number of SMEs that are underserved. So as we stand, I think in 2020, we had about roughly 60,000 SMEs, so just less than 10% of the total SME population is funded by the commercial sector. There's about 90% that are underserved, and most of these, I think, all close to 95, like Paul said initially, I think close to 95, these are micro institutions, and the only financial institution that may serve these in a very focused manner are fintechs. Banks are kind of focusing more on clearer businesses, small and medium enterprises, which take a big chunk of the financing from the banks and maybe from the MBFIs. But I think micros are tailor-made for or vice versa. Fintechs are tailor-made for these micro institutions. I think this is the focus, and this is the way forward to increase that that growth from 31% to 100% the next
No, I
year.
totally
And I'd
agree.
just like to add to that,
Yeah, go
right?
ahead.
So I don't think the challenge is lack of funding. The challenge is lack of infrastructure, which is coming into
True.
play with establishment of SME bank and establishment of, the partnerships between fintechs and commercial banks, which is going to make, that 30% growth.
By the way,
into-
it's attractive business as a segment to grow on this segment. Yeah, when it comes to banking side, SME is very attractive to grow on it. It's
So
a
that was the
profitable,
question I was
and it's
going to
on
ask.
the long term. I mean, it's the micro, they grow to become a small, then they grow to be a medium. So the longer you have a relationship, there is a lot of ancillary business and profits coming from these companies. So it is by nature is attractive business, and there is a aggressive growth strategy in SAB toward the SMEs.
Okay.
So
All right.
going back to Shilpi's point, I think the infrastructure is there, but I think it's not linked like we want it to be. Ideally, you would like all these financial institutions and credit bureaus and all other players in the market to be talking to each other. Open banking may be one way of it, but we don't need open banking to have that dialogue between
Totally
these
agree.
institutions. And I think this is the infrastructure that needs to be there, and that integration and dialogue needs to be there to open up that marketplace.
But there's a way for the banks to take more SME exposure without actually taking exposure to the actual SME, right? So both Lemma and us will take money from the bank. Don't worry about the SME, right? Now you
would love to.
Listen, well, you've already given me money. I'm still working on Saab here. All right.
By the way, this is not gamed by me, okay?
So just take away the risk of the SME. Take my credit risk. You could so if you have to originate, I don't know, 10,000 loans, we could probably originate 10,000 loans. You make one big loan to us, and you have our credit risk to sit on instead of the small and medium enterprises. That's usually the way I look at it. So when I hear banks, when we go visit banks, we haven't visited Saab, so I can't. But we visited other banks, and they said, "Oh, SMEs are too risky." How can you're lending to some SMEs, and I'm showing up, and I'm in between. So I'm 200 million of revenue, 50 million of net income, and you're not willing to lend to the SMEs by taking my credit risk. There's some disconnect between this whole process. I don't know what it is, but it's always
You know what
been
I
this
like
way.
about it is at least getting discussed, right? And I think those discussions are actually the first step towards it. I think, so I've heard a number of points, right? So let me try and recap what I've heard, and maybe I've missed a few things, right? So yes, there is an awareness challenge, right? So the SME or the micro businesses need to be made more aware that there are more avenues through which they can access their banking needs, right? I won't just call it financing, but the wider banking needs. I've heard that more infrastructure is on its way, right? I've heard that some of the infrastructure actually exists but needs more connectivity or better connectivity, if I might say. And then obviously Paul's got a very clear point saying that yes, all of that is required, but there is still the liquidity question which needs to be solved, and that liquidity can be solved in multiple ways. right? You as commercial banks don't have to go down and pick the small businesses like the one I might choose to run. I don't, or people in the audience might, but actually might want to take a risk on someone who's willing to go and do that hard work for you, but is actually in the M or the M moving to the L segment.
Higher
Right.
credit quality,
Yeah,
we like to say.
and higher credit quality on that. But unless you guys have any closing thoughts, I do want to open it up to the audience. I'm conscious of time, it's late in the evening. So any closing thoughts, or can I divert my attention to the crowd and have them ask a few questions?
Let's have the Q&A.
Just nothing controversial.
No, please, come on. We've set tone for it. So feel free. There are a few things you cannot ask, like Paul and my weight, but outside that, I think everything is a go. So any questions, please?
Let's start with the mic.
Come on, Mohammed, you must have a question.
I have, so I said we wait for others.
Okay. Let's start with you. I think it's always easy to get the first question.
Someone,
And then
thanks a lot.
Then people will
I think from the discussion we have seen, I think the liquidity is the major issue. I think with interest rate, globally also is going up and so on. So you're going to still have a problem getting the liquidity as well. So how do you see, like, if there is any ways of